I'm James Turk. I'm a director of the GoldMoney Foundation. And it's my pleasure to be here today with Ronald Stöferle of Erste Bank. You're probably familiar with some of the gold reports that he's written over the last couple of years, which have been very, very well received by the gold community. Ronnie, it's a pleasure to talk to you. I'd like to get a little bit of background at first before we get into discussion about the markets. Why the interest in gold?
Well, the whole story is I graduated from university, and a friend of mine recommended a gold mining stock to me, and I didn't have any clue about gold. And then I was traveling in Central America, so I was in Nicaragua, and I just checked in at the internet cafe, and I said, okay, the stock doubled. And then a few weeks after I was in Panama, I said, okay, it's up by like 500%. So I got really kind of interested into the gold sector, and at the end it was a 40-bagger, and I said, okay, there's some really nice leverage in gold, and then I started my job at the bank. First of all, I started analyzing Asian equities, and then I just went to my boss and said, hey, could I write about gold? We don't have any coverage on gold. And he said, yes, go ahead. So I started reading into gold. And I analyzed like the supply-demand factors, and at the end I was really bullish. So I think gold was trading at around 450 or 500 back at the days, and I said, okay, it's going to rise to 850 to the all-time high, or even to 1,000. And people say, okay, it just went nuts, and nobody really believed it. So So I started to write an annual report, and it got bigger and bigger, and the last one was like 70 pages. And the next one is going to be published on 4th of July.
Will that be distributed free through the internet, like your other reports have been?
Absolutely, yeah. Everybody can download it. It's probably going to be on the web, like on Zero Hedge, on the GATA webpage. And
yeah, I know GATA has mentioned your other reports that you had published. In fact, that's how I learned about your first report, which it said was 4 years ago. I didn't remember being that long, but time is flying. But that's what really brought my attention to your work, and it's very, very high quality material and very high quality report. So I look forward to this next one. It can be downloaded from the Erste Bank website, which is, what's the URL?
Erstegroup.com. And you just Google like Erste and then special report gold. It's always called In Gold We Trust. Yeah. And then you're probably going to find it easily.
Okay. Well, a few years ago when gold was trading, in the 400 or 500 area, why were you forecasting that it was going to go to 1,000 or perhaps more? What were the factors in your mind that were suggesting that gold was going a lot higher?
I think that the economic crisis, or the economic environment was, at least on the surface, it was kind of stable back in 2006, and nobody expected what's going to happen. And I didn't know about the Austrian School of Economics back in the days, even though I'm Austrian and I've been studying in Austria, which is really sad. But when I started writing about gold, it was basically supply-demand, and I just realized, okay, the Chinese gold market got open, so it wasn't allowed for Chinese private persons to buy gold until I think 2001, 2002. And I just realized that they've got a long history in gold and also in inflation. And I saw the developments in India going on, so I saw kind of a shift from the west to the east. Then there was the de-hedging programs. So the big gold producers bought back their hedging programs. Mm-hmm. This was also a big factor on the demand side. Then there was like this decreasing mine supply, which was also a big factor in my first report. And so I came to the conclusion that just for the supply-demand situation, the gold price will rise. And then during the years, I started reading into monetary history, and so it got a whole new dimension opened up, and yeah.
That's when you stumbled across the Austrian school and recognized that there's more to the story than just supply-demand, that it really is money and plays an important role in commerce.
It's really a pity that the Austrian School of Economics, I've been studying in Vienna, and it was never mentioned. and then I realized that, especially in the US, that the Austrian school is getting bigger and bigger, and so I started reading Mises, Menger, and Hayek, and I mean they just got it. Yeah, they had the right answers, and I kind of always felt like an Austrian, but I didn't know that the Austrian school existed. So I'm really glad that I found out about it, and I think this is just they've got the right answers to the big questions.
Yeah. Just out of curiosity, how did you stumble across the Austrian school? Where did you learn about it?
I honestly don't know. Probably somebody in an article mentioned Mises, and then you start
digging into it, and you find out
exactly,
there's a whole new school of thought out there that really makes a lot of sense. Yeah, Mises' theory of money and credit was, for me, one of the key books, that really helped me understand how the monetary system works. Another key book for me, it's done in the Austrian way, but it was written by an American, and it was written back actually before Menger even. Yeah. It was called Organization of Debt into Currency. It's actually a series of articles that Charles Holt Carroll is the chap's name, yeah, who wrote for a business magazine in the States from the 1840s to I think the 1880s. And it was really an important book for me because it sort of explained how money was coming about. The name of the book is Organization of Debt into Currency, and that really makes clear that what governments and banks were doing was taking paper, IOUs, and turning it into currency. Mm-hmm. And I think once you get that and Mises' mm-hmm. theory of money and credit, for me, it all came together. And fortunately, it came together many, many years ago, so I've basically been on the right side and understand what's happening to the monetary system today. Let's talk a little bit about current market conditions. Let's start here in Europe. How do you see things unfolding, particularly with the euro being weak again and the Greek crisis rearing up once more?
Well, for me, it was kind of obvious that the US dollar would have to rise. I just read like 3 weeks ago the daily sentiment index, and they were only like 3 or 4% bullish on the US dollar. So everybody was extremely bearish on the US dollar. They had the problems with the the debt ceiling. By the way, the debt ceiling was raised, I think 93 times during history, so it's pretty funny that there is a ceiling, even though they're kind of lifting it all the time. But from that point of view, the sentiment on the dollar was just extremely negative, and therefore it was kind of normal that it would have to go stronger. On the other hand, I mean, I think that the big factor right now is that everybody is kind of nervous about the end of quantitative easing part 2. Nobody really knows how things going to work out afterwards.
But can it end? I mean, the U.S. government is spending so much money. Where are they going to get the money if not from the central bank? It's not coming from revenue. Yeah. And a lot of people who had been traditionally lending to the government, like the Chinese, and Bill Gross of PIMCO now has supposedly sold all of his U.S. treasuries.
Yeah. I think they'll grow out of the crisis. No, it was a joke.
Oh, okay.
No, I mean, in my presentation, I featured a chart. It's like the official forecast from the CBO. And I said, okay, till 2021, there's going to be 8.85 trillion more deficits. So you kind of, it's not hard to figure out how the dollar is going to develop during such a time, and you just can see that those problems that we're having are just structural problems, and I don't see any reforms right now, and therefore I think that the next crisis is going to get bigger and bigger. I don't know if there's going to be QE3 immediately, but I think there's going to be something similar to QE, perhaps. They just create a new name. I think there's the saying in the States to put makeup on a pig. Yeah. And so there's probably another program because, yeah, as you said, who should buy U.S. treasuries for this kind of low yields? Mm-hmm. I would.
This is sort of like what Mises wrote about what was happening in Austria in the 20s. central bank just printing, well, in that case, printing more currency, whereas in the United States they're using computers to add zeros to the government's checking account, but essentially it's the same thing, isn't it? And Austria ended in hyperinflation. Is that going to happen to the dollar?
I don't know I honestly don't know the answer if it's going to be highly inflationary or even hyperdeflation, as Professor Fekete says, for example. I just know that the big experiments going on right now in dimensions that we've never seen before will trigger a crisis that is going to be pretty big. And I just know that gold is in a deflationary and in an inflationary environment. It's an asset you want to hold, and that's what I'm always telling our clients, that it's just a perfect portfolio insurance. Yeah? I don't suggest buying 100% gold or 100% silver, but I just think that you should be overweight in precious metals in this scenario when nobody really knows how everything is going to work out.
Yeah.
And especially, I mean, real interest rates are extremely low or negative, and in this environment it just makes sense to hold gold.
Yeah, if you put euros or dollars in a bank account for 1 year, you don't get enough interest income to offset the loss of purchasing power from inflation. Whereas in gold, holding gold, gold's up 10 years in a row against the US dollar at 18% per annum on average, if you can believe that. This is looks like another up year. So, clearly we're in a gold bull market, and I guess you agree with me that it's got a ways to go before this thing ends?
Definitely. I mean, at the very end of every trend, there's a trend acceleration, like we've seen, in the Nasdaq Composite, like 1999 and 2000, and in oil and so on. And I'm not sure if you can compare gold to equity indices or commodities, because for me it's not a commodity, it's money. Yeah. And that's what's really happening right now. I think this remonetization is currently happening. And like 3 or 4 years ago, when I talked to our clients, they were just asking, okay, what's your price target? How high can gold rise? So right now, the price appreciation is not why they're buying it. It's just to preserve purchasing power, to preserve wealth. And I think therefore it definitely makes sense to hold gold as a currency and not as it's not a commodity, and you just can't print gold. And as I always say, it's a soft metal, but it's a very hard currency.
Yeah, that's a good point. I like to make this point as well about gold not being a commodity, that it's money. And the way I describe it is that commodities like crude oil and soybeans, they get produced and then consumed and they disappear. Even base metals disappear in the sense that they're dispersed in millions of applications, and nobody tries to hoard base metals. But gold, even though just a small fraction of it is used in industry, it has this value. It doesn't get consumed. It doesn't disappear. All the gold mined throughout history still exists in this above ground stock. So that's why I used to distinguish gold as something unique. It's in this group of this class of things that we call tangible assets. Commodities are one kind of tangible asset. Gold is another kind of tangible asset that's called money, because it doesn't disappear.
This stock to flow ratio, which is extremely high for gold, that's one thing I realized only a few months ago. So this is, for me, that's the biggest factor when you're talking about gold as a currency. So the high ratio between the amount of gold that was ever mined and the really small amount of gold that is produced every year, that makes gold so powerful. And you just got the same with silver, but for other commodities like copper or oil, it's completely different. Yeah. And that's, from my point of view, that's the point why gold is money.
Yeah, the stock to flow ratio is very interesting. The way I describe it is like the above ground stock of gold, which is about 162,000 metric tons, grows by about 1 3/4% per annum.
Exactly.
So you've got this consistency in this growth of the gold money supply, as opposed to the quantity of euros or the quantity of dollars, which 2 years ago, the dollar's M3 was growing at 17% per annum. Now it's much lower, but you know, it's all over the place, whereas gold is just very, very consistent because of the natural consequences of gold mining. It's basically, I assume you agree with that?
Absolutely, yeah. And that's also a factor why, okay, it's not that important if there's 100 tons more production every year. It just, for the stock, it doesn't make any big difference. Yeah. Therefore, I think I just read that the gold stock grows approximately as fast as population grows. Yes. And that just perfectly makes sense.
Yeah, so you have this consistency in gold's purchasing power over long periods of time. I've been told that just like today, an ounce of gold can buy a man's suit, an ounce of gold bought a toga for a Roman senator. So it shows that, you know, gold's been doing for a long, long time. The same thing, that preserves purchasing power, very useful in economic calculation, which actually was for me a very important part of my study in Austrian economics. The whole concept of economic calculation, you know, making the right decisions as a businessman or an entrepreneur, using a form of sound money so that you know that the capital you're putting at work in an investment of some sort is actually being rewarded properly, or as you would expect that capital to be rewarded. And you have to do that and factor out when you're in an easy money environment that's been engineered by the banks, which is the whole Austrian business, you know, cycle theory. What about silver? How do you see that?
We don't have any official coverage on silver, but I always write that I think during this bull market, I'm pretty sure that silver is going to outperform gold. Silver is extremely volatile, as we've seen recently, but it's just normal. I mean, silver was up by, I think 170% since August, and up by 60% starting this year. So it's just normal that there has to be a correction, which is just healthy and normal for the big trend. I'm not sure if we go back to a gold-silver ratio of 1 to 15. As many people argue, because you had a really low ratio between gold and silver during the bimetallism time, and I think afterwards market kind of chose gold
as the preferred store of wealth.
Exactly, yeah. I think people should hold both, but for me, I'm kind of, I think that people should hold of their allocation of precious metals, like 2/3 of gold and 1/3 of silver.
Yeah. Is there any effort here in Europe to enable silver to be purchased without the value-added tax applied to it? It seems like it's a real detriment to have people save sound money when they have to pay this huge tax
I don't think
on
so.
silver.
I think they would probably, it's probably easier to introduce taxes on gold. So I think that's the possibility is higher to.
Let's hope they don't go that way. I mean, it took long enough for them to take the tax off of gold, which I guess they did in 2000 or shortly thereafter, you know, with the euro. Let's hope that they don't regress and go back that way. You know, you live and work in Vienna. What's the situation these days with Eastern European debt? Is it still unresolved? Are there still problems there that have yet to be recognized?
There are definitely still problems, but we're seeing that the over-indebtedness is not a big problem in Eastern European countries. So they don't have a history in buying credit-financed cars or leased cars, or they don't buy like a TV set on credit like we are doing it, or in the US it's done. So therefore, their debt levels are just way lower than in the Western countries, and most of the time when I'm talking to our clients in Eastern Europe, they've got a really high affinity towards gold because they don't have a long history in investing in mutual funds or single stocks or bonds. So they know what gold is about and they understand it, and for them it's also, most of the press coverage from my reports always comes from Eastern Europe, so it's a big market for gold. And yeah, therefore I think I think Mr. Krugman said like two years ago that Austria is gonna get bust because we've got a really high connection to Eastern European countries, but those countries are growing on average between 3 and 5%. It's really stable growth, and I think we can be kind of proud that we are within this region.
Yeah, 3 to 5% real growth?
Nominal growth, yeah.
Yeah, okay.
But definitely, when I'm talking to my colleagues there, you can see that their like working ethics is really high. That they wanna progress, they wanna move forward, they want to build up wealth, and it's a bit different. How should I put it? What's the perfect word? I don't know. Probably they're just interested they're more interested in doing business there. Yeah. They want to progress, they want to grow, and yeah.
So they see gold as a safe alternative? Definitely,
yeah.
Is it physical gold or paper gold?
Mostly physical gold. I talked to a guy, he was from Russia, and he said gold was forbidden during the Soviet Union, but he just had 50 wedding rings made of gold. So there were always ways to kind of diversify. And yeah, for them, physical gold is really a big thing.
Yeah. What about the Greek crisis? What's going to be the impact of that? You know, here we are again, and you know they obviously have to restructure. They're getting aid from the European Stability Fund. There's a lot of discontent growing in many different countries. We have the True Finn Party in Finland, you know, making a lot of noise there, not wanting to support the bailout of Greece. How do you see that playing out?
I really don't know, and I mean, there has to be some sort of haircut, because as I think John Maldon always says it, this muddling through, you just cannot continue doing it, and I mean the structural problems in Greece, they don't get solved. We don't see any bigger reforms, and therefore I think, okay, sooner or later there has to be a decision. But the markets are already pricing, I think that the yields for the 2-year bonds are like 24%, so everybody already knows that they are kind of bankrupt.
Yeah. So in this environment, gold still makes sense as a safe haven?
Absolutely, yeah.
Until this crisis plays itself out and we go back to sound money, if we go back to sound money?
Hopefully we will.
What do you think about the euro? Are they going to, you know, try to bring back the inflationary pressures that are building everywhere?
Tough question. I don't know how it's going to develop. And I mean, honestly, I have to say that 3 years ago, who would have expected that S&P would downgrade the outlook for US bonds to negative?
Yes.
To negative view. Nobody would have expected it. And who would have thought, like 4 years ago, that the US Federal Reserve would have 1.2 trillion of mortgage-backed securities on their balance sheet. So expect the unexpected is kind of what's going on right now. And I think in this environment of uncertainty, you just want and you have to hold gold.
Yeah, physical gold, that's the safe haven.
Physical gold or gold money. And you're coming. No, I think I really don't like most of the ETFs and most of the certificates. I really like gold mining stocks, which is a completely different chapter, and we're seeing it right now, big underperformance of gold mining companies.
Yeah, the mining stocks here look very cheap relative to gold itself.
Exactly, yeah. There's also this uncertainty with QE2, how it's going to end. So I think the next few weeks we're really going to be volatile, and we've already seen it. So in this environment, I'd rather stay cautious, and for our recommendation for the stock markets is a neutral weighting right now, and I think on our next asset allocation perhaps we'll get more cautious and recommend underweighting equities, but I'm not really sure how it's going to work out. But as we've said before, probably there is going to be something similar to a QE program, but they'll just call it differently.
Yeah, it seems like it has to be, given the way the politicians are spending money in the United States.
And I mean, we've got elections next year, so pre-election years are normally really positive for stock markets and so for commodities. So I don't think that they're gonna let the stock markets drop significantly.
I agree with you. Ronnie, it's been a real pleasure to speak with you.
Thank you.
Ronnie Stöferle from Erste Bank. We look forward to seeing your next report coming out.
Thank you very
much.
Was
that the first?
4th of July.
4th of July.
Independence Day, but
American
it's just a coincidence.
Okay, good. Thanks, Ronnie.